this is Morgan here from Fletcher Trading. Today we're going to be looking at the Elder algorithm trading system. I'm going to be explaining exactly how the strategy works and we're going to be applying it to the Nasdaq. I'm not just going to show you 3 cherry-picked examples of this working perfectly, I'm going to show you the last 2 months of trades so you can see exactly how this is going to perform in the long run. For more information, I'll leave a link below where you can download this free ebook going into more detail in how the strategy works. So let's get into the video. The Elder algorithm system is a trend trading strategy, so we're going to start on the 4-hour chart and we're going to be using the trend trader indicator to determine the trend. I'll leave a link in the description below where you can find this indicator and any others that we're going to be using in this video. So if we're in an uptrend here, we're only going to be looking for buy positions, and if we're in a downtrend, we're going to be looking for sell positions. So as you can see here, I've just divided this into uptrends and downtrends. We just had a small consolidation here in the middle, but we're just going to consider this a downtrend. So this is currently the 18th of December, so we're going to go back to the 18th of October to backtest the last 2 months of trades. So after establishing the trend on the 4-hour chart, we'll then drop down to the 15-minute chart. On the 15-minute chart, we've got 2 other indicators. We've got the daily pivot points, which is just a form of support and resistance, and then we've got the Elder algorithm itself. This is just going to give us our trades on the 5 and 15-minute time frame. So the way this strategy works is, if we are downtrending on the 4-hour chart, then we're going to be looking for sell positions. After waiting for a signal from the Elder algorithm, we'll wait for the stochastic oscillator to pass back below 80, and that's going to confirm our entry. So we'd enter this position here, somewhere around there, and then we'd look to set our stop loss either at a recent high or using the daily pivot points. So you could set your stop loss somewhere around here, and then we'd target the recent lows or a support level using the daily pivot points. So if you were to enter this position, you would enter somewhere around here, set your stop loss for around 60 pips, and you would target the lows for around 120 pips, giving you a 2-to-1 risk to reward. So this is currently the 16th of October, so our first trade comes in on the 20th. So we want to wait for the stochastic oscillator to pass back below 80, so we'd enter this position somewhere around here. So there's no recent daily pivot points, nor is there a recent high, so we'll just set the stop loss for around 65 pips, somewhere around this level, and then we're going to target the recent lows, somewhere around 110 to 120 pips. And as you can see, this would be a winning position. So I've just opened up an Excel spreadsheet to make it easier for us to track our trades as we go. So we're going to write the first one down here in the percentage as a 1 because this is a winning trade, and then in the take profit we'll just write down 110 pips. And then we move on to the next one. So our next example comes in here. We'd enter this after the stochastic oscillator passes back below 80, somewhere around there, set our stop loss for around 60 pips, and we'll target these lows for around 120 pips. So we're just going to write this down as a 1, as this is another winning position, and then we just want 120 pips here. Moving on to the next trade, we have an excellent trade here. We have a huge sell-off in price, and we've got a signal from the Elder algorithm. So again, we're just going to wait for the stochastic oscillator to pass back below 80. This happens somewhere around this bar. We then want to set the stop loss to a recent high or a resistance level using the daily pivot points, and then we're just going to target either a recent low or a support level using the daily pivot points. So we'd likely set our take profit to around 120 pips around this support level, and we're going to set the take profit to a resistance level at around 98 pips. Again, this is a winning position for something around 125, almost 130 pips. So we get our next two positions here. And if we were to enter this position, again the stochastic oscillator passing back below 80, somewhere around here. We're going to target the lows for around 160 pips. And if we were to set the stop loss to a resistance level, 140 pips is a little bit too far away. We likely would have had it a bit closer for something around 90 pips, and we would have probably been stopped out. So we'll write this down as a loss, and we'll write it down at around 80 pips. We have a second similar position here, and if we were to wait for our entry, that comes in somewhere around here. We'd likely target the lows for around 180 pips, around a 90 pip stop loss, and we'll write this one down as a win. As we can see here, we have a huge sell-off in price as price continues on this downtrend, and we'll just write this down as 160 pips. We then have a cluster of sell signals here, which if we entered using the stochastic oscillator, we'd enter this position somewhere around here. The resistance level is a little bit too far away, so we'd likely set the stop loss for around 90 pips, and we'd be taken out of this position somewhere around here. So we have a loss of 90 pips. We then get more sell signals as price hits the resistance level. If we were to wait for the stochastic to pass back below 80, we'd enter somewhere around here, targeting the lows for something around 200 pips, and we'd have our stop loss for around 90 pips. We would take around 200 pips from this trade. So then move on to the next one here. We have an excellent trade. We have a cluster of sell signals here in the downtrend. So we want to wait for the stochastic oscillator to pass back below 80. This happens somewhere around here. We set our stop loss for around 90 pips, and we will target the recent lows and this support level using the daily pivot points, and we're going to take something around 140 pips from this trade. So we're going to keep doing this until we reach December. I'll speed this up to make it more interesting, and then we're going to review the trades at the end. As you can see here, I've just finished backtesting these last few trades, and for the last 2 months we've had an accuracy of 69%, with our average winning trade of 109 pips and our average losing trade of 62 pips. This gives us a risk to reward of 1 to 1.7. This means our average winning trade is 1.7 times bigger than the average losing trade. Now we can increase the accuracy of this strategy further by going to the 4-hour chart and looking at areas of support and resistance. The ebook that I've left in the description will go into more details about that. If you want to stay up to date with trades that we're currently taking, then I'll leave a link in the description where you can join our trading analysis group, so you can join our community that is almost at 700 now. So thank you for watching, and I'll see you in the next video.